Welcome, it's denome. In this video I'm going to show you market cycles and how you can use them to know when to buy and when to sell, and how you can manage your risk using portfolio management. So I'm actually using 3 different portfolios for 3 different market conditions, and I will show you all of that in this video. And if you think this is interesting, you know what to do, and let's just get started. So first, let's take a look at the market cycles, because these happen almost every time with crypto, so you always have the same market cycle going on. So first you have optimism, and then the feelings go higher. And at the very peak of the market cycle, when the price is high, this is the highest possible level of financial risk. And this is when everybody else is thinking like this is gonna go on forever. But then we start to have anxiety and denial, like this is only a temporary downturn and now it's gonna continue to the upside. But then you will see something very, very bad. And this is when people lose their money. And then they get discouraged. Then they lose their hope, and they are very afraid, and they just want to get out of that asset. And that is actually the best time for investing, because the downside risk is very low because it has already bottomed, and the upside is actually very high because the use case is still there. And how you should be doing this, instead of repeat until you are broke, you should do the opposite. So when everybody else is bullish and everybody else is saying like, okay, this is gonna go on forever, and everyone is euphoric, like this is so good, I'm so pleased with my investment, that's when you should be bearish already and not wait for other people to exit. So you have to go against the herd here. And this is when I have a neutral portfolio, and when I see that an asset has bottomed, and when an asset is undervalued, when people are losing hope, when they are fearful, that's when I am bullish. And this is what I was doing in March 2020, when everybody else was, or when the market took a deep dive into the 3.5k area with Bitcoin and all the other cryptos followed. That's when I went to super bullish mode. So I went basically all in, and I have been enjoying this time very, very much. And now I'm becoming a little bit more neutral over time as the time goes on. So now I'm converting into neutral zone again until I see this euphoric situation with crypto as a whole. But this also applies to different crypto sectors. So for example, DeFi, for example, I think I am getting more and more bearish on that one. So I have been actually exiting some DeFi positions because the gas fees are so high. So if the DeFi scene would double from this point onwards, it would mean that the gas fees on Ethereum would have to double or triple as well. And I don't think that is sustainable in the long run. That's why I want to exit before other people exit that crypto sector. But there are other opportunities that I think the money will flow into that I'm bullish on. So keep that in mind, that this same thing applies for the whole crypto market, as well as crypto sectors, as well as individual cryptos in that sector. So you can use this for all of that. And now let's take a look at my portfolios. So when I'm bearish overall on crypto, this is about what my portfolio looks like. So let me just zoom out so you can see. So yeah, about 50% is in cash or reserves, 35% is in low risk assets, then 10% is medium risk, and 5% is very risky when I'm bearish. And what this actually means is that I just want to collect most of the money that I can, but I'm still exposed to crypto in case it keeps going up. So that's why I don't want to sell like everything, and I never do sell everything. So that's the bearish situation. The neutral situation is when I'm 35% or 30% cash reserves, 35% low risk, 20% medium risk, and 10% very risky assets. And finally, when I'm very, very, very bullish, I only have 10% about cash reserves or cash bearing interest accounts, or like stable coin investment yield opportunities, or even like Uniswap, ETH DAI, or ETH USDC pairs. And this, some people use like 20% here also, so you can adjust these portfolios to your liking as well. And when I'm very, very, very bullish, I actually have most of my money in low risk assets, and 35% in medium risk assets, and 10% in very risky assets. And this, I have to explain that this risk right here, it doesn't mean the same thing like in previous videos I said something like high risk, high reward. This is not that, because what I want to look for is low risk assets that have high potential, high upside, and a low risk, high reward is basically what I'm looking for all the time. So this is what that is. I will explain that later on in this video as well, so you can see exactly what I mean. But first, let's take a look at the bearish, neutral, and bullish signals. So when am I becoming bearish? When I see mania, and when I see high prices, like the price has already maybe surpassed most recent highs multiple times in a row, maybe taxi drivers are starting to give me advice, or maybe a student is recommending to buy Tesla stocks, or they are saying like buy this thing on Robinhood. That's when I'm start to be a little bit scared that I don't want to be in the market anymore or in that sector. And when I start to see whales are exiting, and then other people are exiting in small amounts as well, so the demand is getting lower and lower and lower, as well as when I see the risk versus upside potential is just getting thinner and thinner and thinner. So maybe the risk to the downside is 80%, but the upside potential is only 50%. So it doesn't make any sense for me in risk to reward ratio. So I want to become bearish. And then I don't see any no-brainer opportunities, because no-brainer opportunities are the ones that I want to enter, because I don't want to think too hard, is this a good thing or not? I want to see no-brainer opportunities. And when I'm bearish, I cannot find them anymore. And then other asset classes. So you don't always have to just buy crypto. You can buy real estate or stocks or precious metals. So if other asset classes start to become cheap, then I may want to allocate my funds into those asset classes as well. So always keep that in mind as well. And then bearish, I just want to point out that it always feels wrong to exit, because everyone else is telling you it will continue, but you feel like I just want to exit. So if you don't exit, you may actually be losing like 50% or more to the downside of your capital. So I think preserving your capital is very, very important, and it feels wrong because other people are telling you like, no, this is the best thing ever, it will just keep continuing to go up and up and up. That's when I want to exit, but it feels wrong every single time. And when I'm using neutral portfolio, I'm starting to expect a reversal. So I'm starting to expect little by little that we're getting into the bearish condition, as well as I see mixed signals. I see that the prices have already mooned, and I don't see as many good opportunities as well as the opportunities that I see are becoming more and more, desperate. So I like currently on DeFi, we see a coin that is just released like 2 days ago, and people are just buying it because it hasn't mooned yet. So I think people are just like that. Like I'm quite bearish with DeFi currently, but anyway, I see mixed signals, but I still see some good opportunities. So that's when I'm neutral, and I of course buy those good opportunities. And finally, when I'm bullish, I think everything is cheap, or most things are looking so cheap, or the asset itself is looking very, very cheap. I see demand is growing, and there's maybe not too much media attention yet. So this is when I'm extremely bullish. And then the the potential to the downside is very, very low in my opinion. Maybe it could go down up to like 50% down, but the upside potential is like 10x or something like that. That's when I want to start to enter into the bullish portfolio. And then with the bullish condition, if we are just looking like crypto as a whole, we can start to see new technologies emerge. And that's what basically kicked this bull market currently, was the invention of these different DeFi protocols and the attention that they got through yield farming. So that's basically what kicked this bull run. So that's typically what happens in the crypto space as well. And now with these market allocations, let's take a look at what these actually mean. So when I talk about very risky asset or low risk asset or medium risk asset, what do I actually mean by that? So first, let's take a look at very risky assets. And this I actually divided into two different categories. So one very risky asset would be the high risk, high reward assets. And these are basically the new or no product yet cryptos. So for example, I just invested into Orion, but I only invested about 1% of my capital. And the reason is that the use case is so massive that if they can get it to work, then the crypto will be very, very valuable. But because they don't have a product yet or a working product, there's high risk there. And for example, Elrond was this for a long time. So for Elrond, they just released their mainnet, was it yesterday or the day before? And they already had the upside now to up to 400% from the down. So you had 400% to the upside because they didn't have the product yet, but people had anticipation for that product. So that's why I want to have a little bit of my portfolio allocated to this particular crypto field. But then there's the other side of very risky assets, which are cryptos which has issues with their service. So for example, currently with DeFi, you have the gas fee issue, and then the upside potential is low. So if the coin has already mooned, maybe 300% or 400% or 800%, is it gonna double again, or is it gonna triple again? If I don't see the upside potential there, then it starts to be very, very risky to be there, because the downside potential could be like 80%. So that's why I would consider a very risky asset at that time. And then again, the price is high, and maybe I can see some mania going on. Like people are just irrationally buying stuff. Like currently we are seeing that with DeFi, you release a coin and the next week it's suddenly like 50 million market cap. It's just completely crazy in my view. And then of course I take a look at different technical analysis indicators like RSI. And RSI basically tells you if an asset is overpriced or undervalued. And I have made a complete video about that one, how I find undervalued assets, where I explain RSI. So look at that video as well if you haven't. And now let's take a look at low risk assets. So a low risk asset would be something that already has a working product, and I can see that the demand is growing. And maybe I have some insider information that I have been able to find on the internet, or through their Telegram group, or through their Twitter, or maybe I talked with the devs, or maybe I talked with the people who are actually inside the company or project. So I may have some insider information there that I think I know that it will go up. So these assets I would consider low risk assets with massive upside. So the low risk here also means high potential. And the price is low, maybe it's nearby a support level, and this I like to see. Support level, again, I explain it with the video. And maybe there's some fear turning into hope or optimism, and that's what I want to see. And these assets is basically where I want to hold most of my crypto value, because these ones I have the most amount of potential to grow even further. And next, the medium assets is basically when you have this low risk asset which is in an uptrend. So this already has like a working product, it's in an uptrend and the demand is growing, but maybe it is already nearby a resistance level, so it could have a pullback to the downside, and maybe it's not a clear winner. So for example, we have different Ethereum competitors like Algorand, Zilliqa, Cardano, Tezos, and other ones. Maybe you pick one of those, but it's not a clear winner. So it could be a medium risk asset because of that as well. But maybe you have some insider information to that asset, so it's not actually a medium risk asset in your mind. Maybe it's a low risk asset. So it always depends on the investor if it's a medium risk asset or a low risk asset. So I don't have the crystal ball. I don't know all the information on the market. So sometimes I'm wrong and my timing can be wrong, but this is how I typically like to look at different assets. It's just look at its potential versus its downside risk. That's basically how I determine the risk profile for that crypto. And then finally, for the cash reserve, this is for taking profit, and also you can earn interest passively with the cash with different stable coins on different lending platforms. And this is basically there to be ready to be used if you find these low risk assets. And for me, currently, I'm been investing a lot into MCO because I think it's a low risk asset because the demand is growing very, very rapidly. It has a real working product, and well, you could say that I have insider information because I have been covering so much of MCO lately, and I know their like search engine rankings. I know a lot of things, and I just see the demand growing so rapidly, but the price is still so low, and we're nearby our support level, and everything is just telling me that it's a low risk asset with massive potential. That's why I've been buying MCO so much lately. And Bitcoin could be like a medium risk asset currently because we have already been in an uptrend and demand is growing, but we're not sure if it will keep continuing to go up or not. But I'm still exposed to Bitcoin because I do think it has big potential still. And Ethereum, you could consider it as a medium risk asset or a low risk asset because I told you here already that DeFi is in a bubble, but Ethereum is a little bit different because people who are buying these DeFi coins, if they want to cash out, they will probably buy Ethereum if they think that the DeFi coins no longer provide any upside to them. So that's why I think Ethereum is good. And also Ethereum with the gas prices, no matter if it's Polkadot or Matic or some other layer 2 solution that will help scale Ethereum so that these gas fees are no longer a problem, Ethereum will be the crypto that will capture the value of that technology. So it doesn't matter, like maybe Matic wins or maybe Polkadot wins, but I'm not sure which one's a clear winner there. So those are medium risk assets, but I know that the winner will be Ethereum anyway. So maybe that's a good reason to put Ethereum here in the low risk asset, even though the price has already been going up a lot. But I still think Ethereum has a very high potential in the future, especially with the staking coming up, locking up a lot of the Ethereum funds, as well as the scaling solutions besides Ethereum 2.0. So that's why I have a lot of Ethereum as well. So that's just my take on the current market condition. And how you want to do this is that you want to allocate cash into low risk assets as much as you can. Of course, you buy other things as well, but this is typically what you want to do. And the low risk assets, they will turn into medium risk assets when they are in an uptrend. And then the medium risk assets become very risky assets because the upside potential is just getting thinner and thinner and thinner the more upside we see. And then what you want to do is you want to convert the high risk assets into cash and reserve or low risk assets. And this is basically how you would just keep this wheel turning forever. And this is how you create massive wealth using these market cycles. And now I just want to show you a little bit of the different crypto sectors, because crypto as a whole has a market cycle, but within that there are different market cycles in different sectors. So Bitcoin I would consider as one sector, DeFi I would consider as one sector, payment coins, company coins, cross-chain or interoperability coins. Then you have utility coins, and then you have infrastructure coins like Link or Zilliqa or Cardano or Ethereum. So all of these are basically different sectors, and some coins can touch multiple sectors here. So for example, Ethereum is touching DeFi as well as infrastructure. So keep that in mind as well. But currently, because I think DeFi is in a bubble, I'm looking at company coins as well as scaling coins and infrastructure coins like Ethereum. So that's just what I'm currently doing with my portfolio. As a whole with crypto, I'm still bullish, but I'm becoming a little bit more neutral because I have already captured a lot of the upside. So I want to convert a little bit into cash, which I already have done in some amounts. And maybe if there's a pullback, maybe the Ethereum will become even more low risk asset with higher potential. Then I will again use my cash reserves to buy more Ethereum as well. So this is basically how I always play. And if you just take a look at this one, this is basically how it would always happen. So you have the crypto market as a whole here, but then you have these mini cycles within sectors, and within the sectors you have different cryptos having their individual cycles as well. And just a few tips, tips and tricks or rules, and these are soft rules. I don't always follow them like with a very hardcore thinking. So I typically buy pullbacks. I don't buy, let's say you have a recent high and you already went through the recent high. I may still pick it up, but if the recent high has been overreached by 30% or 50% or 100%, I'm not gonna be interested into buying a new top. I want to wait for a pullback, maybe 33% to the downside or 50% to the downside before I buy an asset. And that's just a rule that I typically want to hold to myself. So I'm not buying the top. I hate to buy the tops. I wait for a pullback and then I buy the pullback if I do think the coin still has potential in an uptrend. And then another cool trick is to use dollar cost averaging. So what I typically do is I wait for a pullback, then I buy it. But if the pullback continues, but the fundamentals are still telling me that yes, just keep buying this because it's a good asset, then I will dollar cost my purchase. So I will buy more and more and more as the price goes lower. That's what I've been doing with MCO as well. And then I want to invest a lot into different passive income tools. And I've made a playlist for all different passive income strategies with cryptocurrencies. So you can take a look at it's popping up right here. So passive income is really good because even if we're coming down, at least I'm collecting passive income. So I want to do that as well. And then spread your risks. You want to spread your risks between different platforms, different cryptos, different sectors, as well as with different income generating tools. So you don't want to be just everything in one place. And then a cool trick you can do is you can long volatility. So for example, Uniswap is great for this. And I made videos about Uniswap before, but with Uniswap, if you provide liquidity to the exchange, you actually collect the exchange fees when people transact. So for now, Ethereum has been pumping a lot, but even if it comes down and I am providing liquidity for Ethereum, because there's so much volume being traded, I actually get the fees from other people trading Ethereum. So even if Ethereum is coming down, I just collect the fees from those transactions to actually make money. So I'm not worried that Ethereum is making a pullback currently to the downside because the volatility is giving me money through the fees on Uniswap. So that's a cool trick. And I made a video about Uniswap as well. It's in the passive income playlist as well. And also, when in doubt, just cash out. If you don't know what to do with your money, always cash out because it's better that you have money than you suffer minus 50% downside. So always cash out if possible. And like I already said here, maybe if the crypto is going 50 or 100% to the upside from a recent high, maybe it's a good idea to cash out. So at least you can collect some money from that. And maybe if there's a pullback, maybe you want to buy again the asset. So that's a mini strategy there that you can do with some of your funds as well. And then always think about the worst and the best possible scenario. So think about the maximum amount of downside that you can suffer and the maximum amount of potential that you can receive. So think about your risk to reward ratio. For example, I recently bought Orion because it's in a sector here. It helps with DeFi scaling. It helps with the Ethereum scaling. And it's basically like a company coin because it's an exchange token as well. So it's very interesting coin. It's touching many of these aspects, but it's a very high risk, high reward play. But I only invested like 1% into that typical coin. So in that scenario, I think the downside risk is 100%, but the upside risk could be like 1000% or 2000%. So I just wanted to buy into that before it starts mooning like Elrond did. And those are basically my best tips. And if you thought this video is useful and good, and you learned some good ideas or tips to manage your own portfolio, consider pressing the like button and subscribing to this channel for more videos like this one, as well as if you are really hardcore and you have Brave browser, consider tipping me on the